lunch, the delicious lunch. We are back again with the technical session in the two-day National Tax Convention organized by ICAI Direct Tax Committee and being hosted by ICAI Ahmedabad branch at this lovely venue. So now the third technical session is all about the tax landscape of Gulf Cooperation Council and opportunities for the members. The Ahmedabad branch has been striving to create opportunities and to deliver the opportunities to its members at large. And none other than we have Shri Gururajan Krushnamurthy ji with us from Dubai. Please may I have a big round of applause for sir, who has joined from Dubai to deliberate on this topic. And to take the session ahead, I request CA Suraj Jain to please come forward and introduce the learned faculty.
Thank you, Abhinavai. So we have Gururajan Krushnamurthy here. He has more than 2 decades of business application software experience, and he is very instrumental in technology and software application all. And he is very instrumental in across SME, across India, across very Gulf country. And he is a finance head, Zoho application at UAE. Right? Welcome.
Landscape, we wanted to go this approach in 4 parts. First is I will give you overview of what is the tax landscape, etc. I will take country by country, explain you what are things very important in that country. Some of the things I may go in detail. For example, corporate tax I may go in detail. Some of the things which I may go quickly faster also because of the interest of time I was told this time adjustment has happened. So I will try to condense that part. I will also give you an idea about how actually I represent Zoho Corporation. So I will also give you a very brief info about Zoho and how Zoho can be a support for you if you are looking for opportunities. And finally, to sum it up, I will come up with the detailed opportunities what are available in GCC, organization GCC, and then we will sum it up with the question and answer. This is the rough agenda for my session today. So, what is the GCC tax landscape? Before we move on to the actual GCC tax landscape, though some of you might be familiar with this, some part of information what I am sharing, but to set the context, I will tell you that these are 6 actual countries, 6 distinct countries which are forming Gulf Cooperation Council. From 1980, they are together as a one block, politically, economically. There is a customs agreement between all these 6 countries, and most of the time they are working unison in international area. They are like brotherly countries. I will use the word. Of course, brothers do have some fights in between. I am not referring to the political aspects. Always there are some difference of opinion in finance matters between these countries, but definitely that is the way it goes. And citizens of these countries move around freely between these nations. Only we need visas, Indians or other country persons we need a visa. But as a bloc, it is one, I would say, one economic bloc, I would say. But each of these has some distinct characteristics, so that when you are actually operating as a finance professional, we need to to understand certain elements so that that will be helpful for you. That is the objective for this. Even if you look at the 6 countries, I have put it in 2 different buckets. This is not just like that. There is a purpose in it. The first what you make as a finance professional will have a bearing. So you need to, whether you might not be directly involved in the oil or gas business, but still you will be making your financial decisions based on that. So definitely that is there. And others, now the governments have realized this is going to be a resource which is going to get finished in some decades. So almost all the governments have taken a strategic call. They have to diversify and then they have to bring in other businesses. So from that angle, there is a major change in the percentage of share, especially even when they publish the GDP, they publish depending on oil and non-oil. Like that, the country is categorized when they do the publication. This is very important for as a finance professional to know that. Another key factor to know when you are a finance person there is the organization ownership patterns. Here we know in India we have sole proprietorship, LLP, LLC, like I am not going to go in details, you are experts in that. What we are referring in these countries is, some of the countries allow 100% ownership, again in some areas. Some of the countries allow you need to have a local sponsor to start a business or to start a venture. Even employment, if you are looking as an employment perspective, sometimes it might be required that you need to need a sponsor, basically an employer as a sponsor, and then you get your work permit or labor card or whatever you can call it, that is required. This is a major change. It's not like you go there and you start a business. There might be some restrictions on that. This we will cover towards the end as a opportunity section. We will again cover that. And of course, language. When I talk about language, all of us know Arabic is the primary language there, but countries do not work in that. For example, in UAE, the business language is English. Everybody knows Arabic, but nobody uses Arabic as a first point of contact or first point of discussion. But if you go to Saudi Arabia, it is not the same. They start Arabic as a first business language, then they shift to English in case if you don't speak Arabic. So each country has its own variation. So having knowledge of Arabic is a plus, but it is not mandatory. Again, I will tell some countries to work as a tax agent or you want to practice, they would expect you a basic knowledge of Arabic, because some of the times the laws there mandatorily are published only in Arabic, and they say that if there is a discrepancy between this English and Arabic translation, the Arabic one will prevail. Especially for finance professionals, this becomes an important point. Moving on, every country is claiming it's an open market. As I agree, it's fully open market, capital in nature, I would say. But we need to be aware of these countries are absolute monarchies in one sense. We need to, I'm not commenting about their political stand, etc., anything, but as a business or a finance professional, we need to understand that there are certain things happen in that country in that manner, means it will happen like that only. So that is the set rules there. You cannot apply your Indian lens there and check why this is not done in this manner. A case in point, for example, ISPs, technology space, I will take that. The licenses issued to very select players for telecom industry. It's not very easy to get a license for new player there. So those kind of market challenges does exist. So as a finance professional, you need to actually take into account of all these and then operate that environment. Okay, all these countries, tax was a kind of an unheard word till 2018, I would say. Of course, tax was present in these countries, but never enforced in a real spirit. Later it was there, tax was present in one form or other, but it was only to select industries or select organizations, banks, BFSI, only select industries are really applied there. But from 2018, there is a change happened in the entire tax landscape. So if you look at these countries compared to either other areas in the globe, tax is relatively a new word, I would say, for a business owner or somebody. So you need to take that in the mind when you are interacting with any business person. So tax is one more thing for him. Maybe India it's different, or US or UK, the level of importance or requirement they put to attach to the tax might be different than what is happening in GCC. So, and even the governments, when they are enforcing, of course government is very particular about enforcing, but when they are implementing it, there might be what is written in the law and what is in the practice, there might be some differences. This is, government is aware of it, but still government is letting it go so that the people come into the tax framework system. So this is another key point we need to know about the organizations. Another key factor as a finance professional should know is about the concept of Islamic financing. Again, I am not talking about religion here, please don't mistake me in any of those concepts. Select organizations follow Islamic financing, especially in the BFSI sector. They have this lens whenever they do the transaction. Again, my limited point here is I am not going to give you a lecture about Islamic financing. It basically has four major pillars. Interest is forbidden, and there are some prohibited activities where investments are not allowed. Say for example, alcohol or pork or things like that, you are not supposed to invest. And then speculation is completely banned. So in terms of bonds or anything, the way how you deal a bond and how you recognize the revenue in your books of accounts, it's completely different here. And high risk elements, there are activities are prohibited in Islamic finance. If a particular activity is of very high risk, then Islamic financing says that don't indulge in that activity. So these are all the four pillars of Islamic financing. And then how you take the finality of the transaction. So that is also important when you are, especially in revenue recognition, you look at it. So they will look at how the transaction will be finalized. Then accordingly give a credit or debit into your books of accounts. And lastly, how you share the profit and loss. There also, depending on the ownership pattern, and there are multiple things. Again, that Islamic financing itself is a 1 hour, 1.5 hours introductory lecture. I will give a skip to this here. But you need to be aware of at least the basic concept of Islamic financing, though the organization where you are consulting or getting employed might not be involved in that. But the way you are going to deal with another entity, business entity, where this Islamic financing is their day-to-day work, then you need to make your activities adjusted to that. So from that angle, you need to understand the Islamic financing. Lastly, but most important is the currency part. We all say in Dubai, though it is in dirhams, it's basically USD only. It gives a plus also, it gives a minus also in one angle. As finance professional, you understand what I'm saying. So this 3.67 per dollar, 3.6725 dirhams is per dollar. That is the way it is pegged at. It is a kind of hard peg. So whenever US Federal Reserve announce a change, the same day or the next business day, the Central Bank of UAE does the change in the interest rate. So it gives a kind of a stability to you as a finance professional, irrespective of what happens to other currencies, etc. You are linked to USD, but sometimes it might have an adverse effect on your books of accounts. In an adverse event happening in somewhere else, then if it affects USD, there is a very high chance that your currency in which you are maintaining books will also get affected adversely. Especially if you are following IFRS, then how you value the currency, how you made an investment in some other place, all those things are important. Again, you need to wear that lens and do that, except Kuwait, which is linked to a basket of currencies, but all other countries have linked to US dollar. Why I am giving this primer is, last again, you will have, say in India, whatever said and done, 95% or 98% the professional people will be Indians, correct? So when you interact with them, it becomes culturally easier for you. But in UAE or Saudi or any of these countries, the professionals are from different across the globe. For example, in UAE, I can say that 150 nationals are there easily. Finance professionals itself, I would say easily 10 countries finance professionals are very active. I have spoken in multiple, be it Philippine Institute of Certified Public Accountants or you name it, Russian accountants, you will have French accountants. They come with their own qualifications and the way of approaching a thing. Of course, accounting remains the same, there is not much difference, but again how you see the things from an accounting perspective, it is completely different. So you need to adapt to that if you are going to do any of the work in these countries. Again, these are all again broad level pointers to set the context. So let us take one country which is United Arab Emirates, where approximately 500,000 established businesses are there. Please don't quote me the numbers exactly outside, but it is approximately 500,000 businesses are there. So when you look at 500,000 businesses, 95% of them are from SME background. 95 is a lesser number, I am going by the book. It may be 98% are from SME background. What is an SME? Of course, Dubai government provides a detailed guidelines. What is an SME? You will take broadly, you will classify into 3 categories: small, medium, again trading, service, manufacturing, your head count, your turnover. Again, all those things are there. Predominantly, as a finance professional, you need to look at it. You are going to extend your offerings in an SME. Of course, an occasional Emirates might be there or occasional Damak might be there, which is a big company, but most of the time you will deal with an SME, so that your behavior, your way of working, you need to get adapt to that. Sorry for that. Okay, this is a very important statistic. You need to look at, this is the projected growth by World Bank, 4.2%. Of course, we in India take certain numbers for granted, but outside this is considered as a very good amount of growth in terms of GDP. So the growth is projected at 4.2% from this year, next year, at least that's what is the forecast is, unless some external event happens. So as a person, you need to look at 2 major cities in UAE, one is Dubai, another is Abu Dhabi. Again, there is also a lot of difference. If you are operating in Dubai, you will find sometimes whether you are in Dubai or you are in India. If you have, so those who have come to see Burj Khalifa can vouch for this. So definitely you will feel like you are in some part of India, maybe Bombay or some city like that, or sometimes some people jokingly say they are in Kerala. So that kind of things will be there. But in Abu Dhabi, it's more of Arabic orientation would be there. So these are all the 2 major centers for business really in UAE. So you need to look at that angle also. Okay, let's come to more relevant to our topic. In 2017, UAE government constituted Federal Tax Authority, which is a body of people which was created as authority as a new one, drawing officers from Ministry of Finance of UAE. So they constituted the body and they said that all the taxes, irrespective of whatever may be the nature, will be administered, controlled, collected by this particular body, and they have a very good website. Whenever you have time, you can go through that, you can understand, everything is in English, you don't need to know Arabic for this. You will have all the data required about the UAE taxes available here. My point is not to show and bore you with all those things. I will take out only important points and take you through here. Basically, there is a value added tax, excise, just hold your horses, it's not excise what we perceived 15 years back or before the introduction of GST, it's a slightly different excise. And then there are some local taxes. And recently the corporate tax was introduced. Corporate tax, in other words, is nothing but your business income tax. This is what is being considered. Please note that there is no personal income tax in any of the 6 countries where we discussed at the beginning. So there is no option for personal income tax in any of the countries. And at least very recently the UAE minister has publicly announced that we don't have plans to introduce such a thing in the near future. So, there is no personal income tax, it is only the corporate income tax what we are talking about. So, I will take one example of UAE value added tax and then explain to you in detail, so that you understand the tax structure of all these countries. When UAE got into value added tax, what they happened is all the 6 countries signed an agreement as a cooperative agreement that all are agreeing to implement VAT from 1/1/2018 till whenever they want. There is no definite time period, but everybody will follow a uniform rate. Some classes were like that. So, they signed an agreement. That agreement forms the basis of value added tax. So, UAE started with 5% on 1/1/2018. Needless to say, tax, zero rated, exempt. I think these are all known to you. I am not going to go in detail of any of this. Broadly, this follows OECD guidelines. I presume all of you are aware of the OECD guidelines when a country is introducing a tax, indirect tax system. So, that is the way this is also introduced here. There are few differences here I wanted to highlight. There is a 375,000 dirhams threshold as a mandatory taxable supplies that was introduced. So, that means if your business is above that, you are expected to register, and if it is 187,000 taxable supplies either in this year or in the next 12 months you are going to reach, you have an option to register for and take a TRN number, which is nothing but tax registration number you can take. Once you have the TRN number, you can issue a bill and you can claim input credit, all the standard stuff of a GST regime. Though it is called value added tax, practically it is for all goods and services. It is a GST only, but they are calling it as value added tax. This is the brief introduction about VAT. So, there are 2-3 elements we need to look at it. Of course, UAE follows the earliest of 3 rule, whether invoice, delivery or collection, that is the standard stuff. But place of supply plays an important role. Where you supply the goods or service, that emirate gets a share of the tax. So, during reporting you need to include that part, so that the government is aware that you have made a sale or you have made a service supply in a particular emirate. So, there is some internal calculation by which they allocate a particular percentage of that tax to that emirate. So, emirate is something new thing for you. We know only Dubai and Abu Dhabi, but there are another 5 emirates in the UAE. So, they are actually as good as the states. You can, for easier understanding I am giving, like there are different states within UAE. So, that is what we are calling it as an emirate here. Okay. This is a very good statistic I thought I will share with you. Last year, 173 billion of tax collected from 425,000 businesses. So, what does that imply is the government is doing something right. They are collecting taxes. Every month 4,000 new businesses gets added into the VAT. So, as a finance professional, you can easily understand either they are at 187 above or at least definitely 375, very high chance, because my practical experience I can say that nobody voluntarily registers. Once they become mandatory, then they register. So, there are approximately 425,000 businesses who are doing an annual turnover of 375,000 dirhams, which is roughly $100,000, give or take some thousand here and there. That is the amount of business that is being happening, and 95% of them are SME. So, you can understand that what kind of opportunity exists there in that country. And as a return filing, they must file the return either monthly or quarterly based on their turnover. The FTA advises them you need to file monthly if it is a very big company. If it is a small company, they give a 3 months window for that. And it is on 28th of that subsequent month. So, it is completely online. There is nothing you need to do for filing of return. There is an MRA tax portal which I was mentioning. One can log in and then they can do that. Key factor there is Emirates wise reporting. When you make a sale or supply, you need to allocate which area that particular sale has happened and then report it in the respective box. Reverse charge mechanism, I think again I am not going into detail of reverse charge mechanism. There is a small difference here between Indian context and here. The Indian context, you have a URD supply, correct? Unregistered dealers, then you record it and then do. There is no such provision there. Instead, select industries within UAE, they have been given a reverse charge mechanism. For example, gold or precious metals, electronics items, bulk, when you are selling then you have an option for reverse charge mechanism. Of course, import, you will have a reverse charge mechanism. Normally, how will you do in any other country? The same mechanism is followed. Online payment, previously FTA was accepting checks, but now they made it mandatory that you need to pay the tax only online, and in case if you don't pay, there is some penalties, percentages, etc., like what you would expect in any tax regime. The same stuff goes. Last point is electronic audit. So you are expected to say, for example, if you are lucky, the system picks your organization TRN number, and FTA will send a mail to the business owner saying that you need to submit your details to me. So that return filing is only a consolidated level. For example, in a month or in a quarter, I sold 100,000 dirhams as my sale, and this is my input credit, and balance is the tax I will pay. FTA doesn't ask how this 100,000 has come from, they never question. But only if you are lucky to be picked for audit, then you need to submit the full details supporting that. So that is what they call it as FAF, Federal Audit File, so in which you are going to submit. A quick pause here. How easy or how difficult that is for you? Very easy? Okay. Because we have seen much more complex tax regimes, but this is the way the tax is done there in that country. Okay. Sorry, this is some change. This is the most important thing. Many businesses do not do that. There is a mandatory requirement of 7 years you need to keep the records. So many companies don't do that because there is a lot of turnover in the accounts department or finance department of the organization, so they don't maintain the records properly. But now FTA or the government bodies insist that you should have the records for 7 years. So as far as VAT is concerned, there are some very basic requirements with respect to invoicing. I'll just quickly show you. So I will use the Zoho books for this just in case. So this is an invoice requirement. There are some 13 points. You should have a tax invoice as the minimum things, etc., etc. You should actually explicitly show what is the taxable amount, what is the tax amount. You should also mention different rates in the summary. There are basic requirements which is any of us will know, very simple, but still the government is insisting that you should have those things in the invoice. Key point to note is right now there is no mandated requirement for e-invoicing at this point of time, but FTA is contemplating from 1st July 2025, UAE also will adapt the e-invoicing. I will cover about e-invoicing in the KSA section when I come there. So this is the way the invoice is, typical invoice is mentioned. You need to have a TRN, basic stuff, nothing too complicated, but this is the way the invoice is generated. In terms of return, I'll just quickly show you a return. Whatever we discussed earlier only will be there. This is a typical tax return. You can see here the standard rated supplies in Dubai, Sharjah, Ajman, etc. And then you go further down and you say what is the input credit. Of course, input credit, there are conditions attached to that. You should have a valid bill. You should be paid in 180 days. If you are not paying before 180 days, you are not expected to claim the credit. Those kind of additional rules do exist, but nothing too fancy or nothing too much to worry about it. And then what is the total value of tax, and you pay the tax through MRA tax portal. A point here is there a way to online update that in the system? Currently still, as we say, it's only 6 years old, the tax system is. They do not have the systems directly to take the returns from solutions like Zoho books, etc. Still the discussion is on, so that there will be an option in the near future to electronically receive the returns or the invoices, etc. As we speak, it doesn't exist. It's a manual filling again. You need to log into the portal. Okay. The key point is, when you are registering for the VAT, you will get an access to the username, password, and then the standard stuff goes with a MRA tax portal. I was talking about audit file. I will show you an sample audit file. I don't know whether you can see this or not. So this is a kind of a tax file information you are expected to submit. Very basic information. What is the customer name? What is the taxable TRN number? What is the agency name, TAN number, tax agent name, the basic stuff. FTA has come up with a concept of tax agency. In case if a business is associated with a tax agency is nothing but a accounting or a tax body who can formally offer this kind of services to businesses. So, if you are tied up with the tax agency, those people will do that. Those names are also covered in returns in the audit file. So, if there is a challenge, they will not call you, they will call the tax agent in that case. So, this kind of an environment is there. You can see the report there. This is the kind of VAT reporting that happens in UAE. Moving on, another tax that comes into mind in UAE is the excise tax. When we say excise tax, our notion goes to the excise duty which was there from 20 years back, etc. Here what we refer is excise is, there are some harmful commodities, the government wants to reduce the consumption of that. From that perspective, these goods are shown. The rate is 50% for the carbonated drinks and sweeteners, etc., and tobacco products, it is 100%. So, if you are, in case if the business is handling in any of this, you are expected to charge the 50% or 100% extra, either at a factory level, if the facility is manufacturing, then it is at a factory level, or you are doing at import at warehouse level if you are going to import it, or at releasing, when you are releasing to a whatever distributor or retail point, wherever it is moving out of the material. It is a kind of a bonded warehouse kind of a concept, what you can call historically, if you refer to in Indian environment. Then when you release it, you pay this 50% or 100% extra, and then you issue the material to the next stage. So, this is a very basic concept, but they have also introduced a concept of digital tax stamp. So, the businesses which are engaged in this kind of activities, they must register to FTA and take so much digital tax stamps to produce, and then they need to stick it on the item, be it if it is a cigarette or some energy drink, etc. They need to print so many stickers or something, and then they need to affix it on the top of the product. Again, I do not know, there are some mechanisms they have enforced to scan it and then bring it, whether it is paid, tax paid or not. Again, this is a different ball game, we will not get into that. And the impact is hardly 2,000 business. We talked about how much 500,000 businesses are there present. This profession, this particular thing is only 2,000 businesses. So, you can, unless you are going to get involved in this as a finance professional, it is just a good to know aspect of tax. Looking at other taxes, I will say taxes on foreign banks is 20%, especially in Dubai and Abu Dhabi, because it is an emirate level tax, and I have not seen any foreign bank situated outside these two emirates. So, it is quite simple. And some other tax, okay, if you are involved in oil and gas exploration, there is a tax on natural resources, which is again at an emirates level. It may vary up to a 55%. So, if you explore so much of oil or if you explore so much of gas, it is going to be a maximum of 55% tax. Again, the details of which I am not privy to, because I am not personally involved in any of those oil and natural gas companies, but this is the way that has been shown. And okay, this is a very important thing which might concern to a lot of finance professionals. There is a separate tax on tourist level facilities. So, if you have visited Burj Khalifa, you would have probably stayed in a hotel where they would have charged a tourism levy of 10 dirhams per night in any hotel. So, these kind of taxes are collected by municipality, or rather I would say, I do not know, like something like octroi, we used to have it in good old days. So, that level, at a municipality level, these taxes are collected and then it is submitted to the government. Of course, the softwares or the technology side needs to adapt it, and accounting is taken care of that. Last but not least, the employee related. For local employees, rather I would say local in the sense I will say GCC employees, there is a 12.5% contribution by the employer and 5% by the employee. Again, it will vary from country to country. If the employee is from Oman and then he is working in UAE, then there will be a different tax rates applied, but in principle, this is the rates at which they charge. So, this is also a kind of another tax here. So, this is where we stop the indirect tax. In the interest of time, I will jump to the direct tax, which is nothing but corporate tax. Is my screen visible? Okay, fine. So, corporate tax was introduced in 1st June 2023 with a 9%. I think this news is known to all of you. It is nothing too much, but we will go a little bit detail in this and try to understand the corporate tax system of UAE. And as a finance professional, you can think again, compare like what I told the VAT, same way you can compare it to the Indian tax system, and you will understand how easy or how difficult that is. I will ask the question towards the end when I complete the corporate tax part. So the timeline was 1st June 2023 they announced, but they allowed the flexibility for the businesses to decide what is their financial accounting period, and based on that they can charge the corporate tax. So some companies which were having June to May as a financial year, they are expected to have the compliance by 1st June 2023 onwards, and they can say that first tax period and return filing period is 9 months. So they can say that on 28th February 2025, they should have filed the tax return. So that is the mandatory thing they brought in. And from 24 to, if it is, most of the companies in UAE follow calendar year as a financial year. 90% or 95% of the companies do that, unless their parent body is somewhere else and then they force them to do that. Otherwise it is a January to December. So for most of the businesses, this is the year actually they are experiencing corporate tax for the first time. As a business, maybe the professional might have worked in some other country, the corporate tax would have been there, but for UAE, this is the first year they are getting it. And in case if you want to change it, you need to apply to the government authority and ask for a change, then they might grant it, they might not grant it. This is one point we need to look at it. Second point is, this particular thing when they brought in, as a finance professional, I want to think through in that. Many years back, if you have followed the international finance news, UAE or rather most of the GCC countries were kept in different list. So because many companies used to incorporate in UAE and then they used to take the undue advantage of tax in the other side. So to avoid all those challenges, the UAE thought that the tax transparency will be there, and also it has brought the very less percentage. So it is only 9% of the tax what we are talking about. And generally, you know, the tax rate is between 23-25% across the globe, but UAE government adopted only 9%, and this is the, going forward, they are looking at that as the standard rate across GCC. It's not only for UAE, different countries have different rates, but this is the way it is going to be. So this we have covered already, so I will give a skip. So who are all taxable? If you look at taxable person, is only on select persons who are not exempt. So in principle, there is an exempt list. Other than that, everybody is negative list kind of a concept. Everybody else is falling under as a taxable person. And the taxable income definition is also very clearly given. So your profit and loss will not be your taxable income. So your profit and loss figure will be different and the taxable income figure is different. And you need to adjust certain items. In Article 20 of Federal Taxation Act, Corporate Tax Act, they have given very clearly each and everything, what can be adjusted, what can have a positive impact, what can have a negative impact on your taxable income after drawing your P&L. Very key factor they are talking about is the transfer pricing. I will go again in detail in each one of this in detail in the next slides. When I say transfer pricing, I think I am not going to go in detail of the transfer pricing. It is the same rules, whatever you see internationally, the same thing applies. Only one or two points is up to 4th degree relative. That's what they have taken as a base. UAE or rather for that matter GCC countries are slightly different in nature in terms of organization, ownership and patents. It is quite possible that very, very large corporate you feel that name is very big and it is a single proprietorship company. Not one name, two name. I am talking about big names. I don't want to tell the names on the stage, but you can reasonably expect some names big names to appear across GCC. And they employ their own cousins, that society is like that, at the key positions. And their salary are completely different, disproportionate to the salary what they will get if they have been employed in somewhere else. All stems from the very basic fact what we studied in 11th or 12th grade. Business is different, owner is different, which we study at a very basic stage. But that concept is actually new to them. This is my company, I am working, I am talking salary, whatever salary I want to take. So transfer pricing becomes a very, very crucial factor for them. So this is a very challenging part for many businesses. So there is a lack of professionals in transfer pricing in UAE, I would say now. Very few people are there now. So that kind of a system you will hear about transfer pricing. So who are all subject to corporate tax? You can see individuals, sole establishment and partnership. They are all natural persons, they are all subject to tax. But there you will find some peculiar scenarios generally not found here. A UAE national might be an employee in a government body, he will also own a business in his personal capacity. So in that case, what will be applicable? Only the profits which are earned at an individual capacity will be subject to corporate tax, not the personal income or from salary what he is drawing. So the registration for natural persons is not yet started. So you can understand, I was telling some time back what is written in the rule and what is practical differences. This is one glaring example for that, because they want to be kind to their nationals. So they are not implemented that particular part of the rule, though it's written in the rule like that. Second thing is judicial persons. I think there is no brainer. It is virtually the same of all these things. But I am introducing you a new concept of free zone here. How many of you are aware of free zone? Okay, few hands are rising, few hands, okay. For the benefit of others, free zone is a specific area in UAE where the government allows you to set up business at a preferential terms of engagement. I will leave it at that. What is those preferential terms of engagement are, for example, for appointment of employees, you might not need a local person's signature, or you might own 100% ownership. Again, business-wise, nature of business which varies, but generally this is, I am talking very high level. And then some free zone entities have been offered at the beginning, you will not be coming under corporate income tax. In return, the government has given the letter to them that if you are setting up a business here, we are not going to introduce corporate income tax there. Again, I am not saying exact names which free zones have got that, but some free zones have given such letters. I have seen 15 years back those letters I have seen, 20 years back I have seen those letters. So those kind of businesses, that's why they are calling it as a free zone. Those free zone entities also must register in corporate tax. Paying is different, registration is different. So all of us know that. So they are expected to do, even if you are a non-resident, but if your income is generated from UAE, you are expected to register for that. There is a provision in the act for that. So I think in terms of income, how you compute an income, I will go a little bit detail in this. So if it is a legal person, including free zone, worldwide income is taken into as an income for you. If you are a foreign company, which is effectively managed and controlled here, for example, Zoho is, we are foreign company incorporated in Singapore, but we have a branch in UAE. So then we will be coming under these things. We will take the whole income of that particular company, but again, whatever tax paid in Singapore or other jurisdiction, we will reduce it and then we will submit the return. So that is the second part. Third is natural person conducting business or activity in UAE. Again, this is a very tricky part, but they have given the rules like that. If you are a natural person and then you are without business name, if you are performing business and business activity, worldwide income which is connected with business or conducted in UAE, then it will be applied there. So this is the income rule they have given. And taxability part, non-resident, I think it is very clear, UAE source income. This is another key factor. Many people own properties in UAE, though they might not be physically present here in UAE. The income generated from them through business activity might be running into millions of dirhams. So in those cases, the property is physically located in UAE means that it will be taxable there. Morning I was hearing the lecture by the previous speaker about a race happening here in India, but the tax is charged on Indian soil. The same concept. If you are doing an event in UAE and then you are generating an income in UAE for that event, then the tax will be charged there. So the taxable income is attributable to the nexus in the UAE. So the nexus part, they have given a very detailed documentation on how the nexus is established, etc. So whatever you conduct an activity or a physical source of income happening there, then that income will be attributable to a taxable person. Of course, a taxable rate is 9%, we discussed at the beginning itself. but up to $100,000 or roughly 375,000 dirhams, the tax is 0%. So if you are making only $100,000 in a year roughly, then you need not pay any tax. That doesn't mean you are not going to file a return, you will still file a return, but with a 0% tax. Same way, anything above 375, there is a 9% tax. To give you more explanation, I think this is very simple, I will not go detail in that, it is self-explanatory. So it's a 1 million 375 minus and whatever rest figure you are going to pay 9% tax on that. So there is a minimum allowance or whatever you can call it in Indian terms, that is $100,000 after they have taken as a base. So free zone is a very, very tricky subject in UAE. Out of 500,000 businesses what we discussed, a substantial portion, 1/4, if not 1/3, 1/4 definitely would be in free zone. So any new business which is set up in UAE is generally set up in free zone. So how you do the conditions for free zone to get a 0% corporate tax? They have introduced multiple conditions. One of the condition is some free zones are exempted. So they have to, even if you are constituted in that particular free zone, you are going to pay the tax. I was talking about 15 years back, some free zones are, those only free zones are coming under the qualifying free zones. And also they have given qualifying income and non-qualifying income. So they have given very clear definition. If it is a qualifying income, then you are not going to pay any tax. If it is from non-qualifying activities, you are generating an income, then you will be paying tax on that 9%. So what are all those things we will see? First of all, it should be managed from UAE. That is a adequate substance. I think all of you are aware what is adequate substance. So that must be there and qualifying income will be there. And some companies voluntarily elect to pay 9% tax. You might ask why they are saying no. They might be having a office in some other place where the tax rate might be higher. So then these people, if they are already taxes suffered in UAE, then they might not want to avail this as a benefit in the other side. So they will voluntarily elect to become 9% payers. And last and most important thing, they must follow the TP guidelines, especially for the related party transactions. So this all might look funny for you sitting in India. There it is quite common that I create one entity, I create one more entity with my brother's name or my sister's name or my wife's name, and then I transact, I do the business from here. This is very normal activity there. So to prevent misuse of this particular activities, they mandated that free zone must follow the transfer pricing guidelines. That's why I was telling at the beginning, if you are experts in transfer pricing guidelines, there is a very good opportunity for you in UAE. Because all these businesses do need some kind of a expertise, experts advice or suggestions in this regard. So who is a qualifying free zone person? I don't know what time I started. Okay. Who is qualifying free zone person? So I will, it's a very small letters. I will take one or two points here. If he has not elected to 9% qualify as a corporate tax voluntarily, the non-qualifying income will be taxed at 9% and there is no 375,000 threshold applicable. In case if they decide to do that, there is no threshold of 375,000. That is also one important rule. And transfer pricing guidelines, if you look at it, there is a requirement of master file, local file, etc. If the entity is above global turnover, like BEPS 2 guidelines, 3.15 billion dirhams they have taken as the base. If you are falling under that, then you must have both master file and local file. In case if the entity is having only within UAE, all their countries, then there is no need for master file, only local files are good enough. These are all some of the guidelines they have clearly published. Going further, if their entity's annual turnover is more than 200 million dirhams, irrespective of whether they are only in UAE, still they are expected to follow the local file and detailed records of them needs to be present. This kind of detailed guidelines have been given. So when you look at qualifying activities, I was referring to earlier, they have given 8 major activities as a qualifying income. Again, here in the interest of time, I am not going through each of this. Broadly, it covers headquarter services. In case if you are offering headquarter services and you are providing those services to your related party entities, then you should have adequate documentation to say that at what rate you are charging them, the regulations, rather not the law is silent on that, but the executive guidelines, executive regulations what has been published clearly states that you need to take what is comparably. For example, globally what is the best practice, you are not expected to take, but you are expected to take a local situation, what is the correct rate for a particular service. Of course, there is a 5% markup which is allowed. In case if it is a 5% markup, you charge it, then it is fine. But you need to have a clear guidelines documented and submitted to Federal Taxation Authority on such occasions. So these 8 major activities are those activities you are allowed to operate in free zone. Then your income is, you can claim yourself as a qualifying free zone. From an accounting perspective or post accounting perspective, if you look at it, how you classify those things, because in a regime where they were never used to a tax, corporate tax environment, there is a transitional provisions, like for example, I was doing accounting in a particular manner earlier, now I am supposed to do this in this manner. Again, there are operational challenges people are facing there. So this is also one good opportunity, I can look at it. So revenue source for free zone, I think we have already covered this. So free zone to non-free zone should not be from excluded activities. Say for example, I have set up a free zone entity, I also sell that kind of a service to a non-free zone entity, then I cannot claim it as a taxable excluded activities. So that is very important activity. And free zone, if you are having a business in free zone and I am selling to another free zone entity, then goods and service should be the receiver should be the beneficiary. He cannot pass on that service to another third party. Basically, in net, point is all the income in free zone also will be taxable, but they have given lot of conditions. Because since they have already given that rule earlier that there will be no tax, to reduce the applicability of that, these kind of rules have been enforced. I will sum it up in that manner. So this is adequate substance. All of us we know that what we are, again I have given a quick example here. Only one thing here is, in terms of organizations where UAE is directed and managed, they have gone to the extent level that when the directors have physically traveled to UAE, again this is nowhere mentioned in the documents, guidelines, etc., but I have seen cases, they have asked directors, have they visited physically in UAE? You understand what I am saying? Like you can create a virtual meeting, online meeting, and then you can say that I have passed the resolutions of all these resolutions. This was done in Dubai or UAE, and then you can sign and submit. But they are asking when the person traveled, when the meeting was held, up to that level they are going through the meticulous details. So they want that should be available. Another key characteristics we are looking at is domestic permanent establishment. When we look at domestic permanent establishment, these 8 conditions they are mainly focusing on. In case if your business has any of this, then they consider that it is a domestic permanent establishment. Again, many businesses falter in this. They just create a business in UAE and then they say that they are operating from there, but none of this is qualified there as a domestic permanent establishment. So then there also the organizations face a challenge, how to prove that there is a domestic, this thing is there. De minimis threshold, I think all of you are aware what is de minimis threshold. What UAE says that 5% rule they have applied. In case if the business is generating some other income which is non-qualifying income, that can be maximum 5%, or there is a limit of 5 million. 5 million is very high, 5% is the most normal things. In case if your non-qualifying income is above 5%, then what will happen is it will get disqualified, and next 4 years you cannot take the eligibility for a qualifying free zone income. So please be aware that if you are setting up a business there, you follow only the qualifying free zone to get the eligibility, because once you are breaking, then 4 years you will be out of the qualifying free zone process, even though you make it. So better to see, now this is where the organizations do, whether should I create a restructure, I create a new company and float it separately and move certain operations to there, etc. Those kind of decisions comes into play. So I think registration is simple. Anybody can log into FTS website and register their organization. They have given deadlines for each of this, and in case if they are not registering, there is a penalty of 10,000 dirhams. Quite steep, isn't it? but it's there. So, if for example, if your business was registered in month of January and February, the last date for 31st May, which passed 10 days, 8 days back. So, if you are registered the company in UAE either in January or February, the last date is May. So, like that they have given a rollover period. So, everyone must register, that is the idea. So, there is a threshold that is there. As far as return filing, we discussed earlier itself, depending on what is your financial year end, there is a 9 months period they are allowing. After within 9 months, you need to file the return, and in case if there is a due to be paid, that also must be paid. There is a 9 months period they are providing there. So, tax incentives. So, please note that you must, if you are a business incorporated in UAE, you must register and you must file a return. You might think, what is this? This is like a ABCD or a first grade person, but this is what we are telling to all the UAE businesses. So, that means you understand. There is a wrong misconception there that if I am not supposed to pay, why I have to file a return? There is a lot of education required. I think still there is an opportunity for chartered accountants, because here in India, you know, like these are all like basics, but there these are all not basics there. So, people still face that challenges. Even if there is a tax loss, people should file the return, because those tax losses can be carried forward to the next year, and then you can claim rebates over that. That is also there. Some of the FAQs, I will show you a very quick example of how a tax return in UAE looks like. So, you draw the P&L based on the IFRS guidelines. Again, this is one more change compared to India. It is mandated that FT has given a clarification, IFRS must be followed if your turnover is above 50 million. If it is below 50 million dirhams, then you can choose to adopt IFRS for SMEs. Again, these are all only in the paper. How many companies actually follow IFRS? I don't know. When we go there, when we are in the meetings, we understand that people don't understand the difference between revenue recognition and that level of concepts itself people are not aware in UAE. Because accounting was not a priority, and accounting was done by somebody who are not properly studied books of accounts. So, they come and do the accounting. So, for them IFRS is a very big thing. So, moving on, I think exempt persons we have covered a lot, all those things. I will just skip to only one major part, which is, 1 minute. There is one important concept called small business relief. If your business is less than 3 million dirhams threshold, then you have the option to have a lesser conditions for eligibility. There is a very less, percentage remains the same, but again your documentation, your requirements, all those things are not there. Small business relief. I think penalties, we all know there are penalties for that. I will just show you one report here in corporate tax in UAE. I can just click that. So, this is a type of report you will get from Zoho books for corporate tax returns. You can add back expenses, you can reduce the interest expenditure, you can tax loss relief, all those things, and you will be able to arrive at tax report from Zoho books directly. We are supporting that in Zoho. As far as KSA is concerned, in the interest of time, I am rushing through. 1 or 2 key points only I will show you here. KSA has introduced VAT, and now they have moved the e-invoicing capabilities. E-invoicing in the sense like what we are doing here, the same concept, only in 2 phases. First phase, you were expected to just raise an invoice with approved software, but in second phase, before issuing the invoice to your customer, you are expected to share that electronically with authority and get an e-stamp there, and then issue the invoice. So, and couple of difference here. One is with respect to the e-invoicing. I will quickly show you the invoice. The language of the invoice must be in Arabic. There is a mandatory requirement, it must be in Arabic. If you want additional languages, you can show the additional language. This is how a typical invoice looks like in Saudi. You can see here, that is the way it looks like, and it has a QR code which is readable by app issued by Zatka, the local authority. So, if you use the Zatka app, if you scan it, you will get the full details. That kind of integration they have done. Now this is going in waves. What they have done is implementation, some of the things to know, what we have done in India only same way. So there is a different waves they have taken. So now currently the turnover limit is 10 million SAR, which is hardly anything. From 1st January, 1st December 24, any business which is with 10 million Saudi Riyal as a taxable supplies, they must adapt the e-invoicing. It was started with say like 3 billion SAR in 1st July 2023. On a phased basis, they have started introducing it. Of course, from Zoho, we support all this. So people can use this solution to generate the invoice and file the return. Of course, VAT return similar, not much difference in Bahrain. Only one or two major differences I will highlight in Bahrain is, if you are looking at Bahrain, there is a provision to file the VAT at the year end. Can you believe it? But that is the truth act. So at the end of the year, you can file the VAT return if your business is less than a particular threshold. Otherwise, it's a quarterly. Most of the businesses follow quarterly there. And in terms of tax rates, they changed from 5% to 10%, though the agreement didn't allow that in the principle. So I will skip in the interest of time. Oman is the same. Only thing is there is a tax card system they introduced. So each business, they should apply for a tax card and take a tax card, then only they are allowed to do that. It's the same TRN number, but they are calling it as a tax card. These two countries I will put at the last, so that will give you an indication of where they are in tax maturity or level. There is no VAT introduced in both these countries, so you can understand. But again, what happens in these countries is, one was taken the decision specifically so that to attract more investments, other was reluctant in a political point of view. So they were not ready to take the VAT aspects. So very 2 minutes introduction about Zoho. Of course, we are a technology company. So we are present in all the places, and we are $1 billion revenue company. Last year we announced it is a self-made, like it is not, no external funding, no debts, nothing, and whatever data it is entered there is completely available only for those people who are having the access. It is privacy first organization, and none of our softwares have advertisements, including the free ones. Of course, these numbers are self-explanatory. I will not go in detail. This is where we are present for more than 25 years with 55 apps. Okay, footprint in Middle East, we have offices in Dubai, Jeddah, Riyadh, Cairo, various cities we have offices and we operate. And in India, we use a rural first approach. Most of our offices are in rural location where many of our employees operate from. There is a substantial increase in the rural economy wherever we operate. We have found it in Tenkasi, where our CEO sits and operates. We have seen the difference actually in terms of localized things. We have 55 plus products for anything to anything we have. For almost all business operations, we have applications for that. I will only highlight 2 points here. One is we bundle the solutions, apps as per the business requirement, and then we do that. And in terms of finance, we have 9 products. I will not go in detail in the interest of time. I would request you to visit our stall just outside. Maybe you can, myself or my teammates would be there. Each of the product does for a specific purpose, but again, all of them work together as a finance suite. Key point here, since all of you are from ICAI fraternity, there is a product called Practice, which helps you to manage your accounting practice. Just in case if you are in a practice type of thing, definitely Zoho Practice will help you so that you can manage your clients' work much better manner. Only request is, currently they are supporting only Zoho platform. Non-Zoho platform is not supported here. Okay, so I think in terms of opportunities, we discussed a lot during the presentation itself. There are few points only you need to be very particular about: the cost of operations. There are 2 streams, like what we do, like employment, there is a one particular stream, and there is a practice, another stream, you need to look at it. So whenever you are setting up business, please utmost care you take what type of entity you are setting up in case you are doing it. In terms of employment, what type of organizations you are joining, please be aware. There are quite a few challenges. We have seen qualified chartered accountants moving to Dubai with high hopes, and then because of the organizations where they joined is not a good organization, then there are challenges associated with that. So this is there, and local presence is a must. In UAE or any of the GCC countries, If you think that you can operate having a setup here and then you can operate remotely, yes, it will work. I won't say no. It is better to have a local presence, a very minimal presence as a front end, and at the back end you can have office anywhere in India, and then you can still get the currency advantage and then you can extend the service there. But as a senior person, you might have to travel back and forth to meet the clients, because face-to-face meetings are extremely important in GCC, rather I would say in Middle East. Last and important points to ponder over are the competition. Though we say that opportunity is huge, I would say there are some 3,000 members in ICAI Dubai chapter. I don't know, I'm just counting, it might be there. In Abu Dhabi maybe 400 chapters, 400 members. Ras Al Khaimah branch maybe 200, I don't know. This is the places where I frequent most frequently there. I go and speak. Huh? No, it might be more, sir, according to me. Maybe members, maybe what you are saying is who has taken a membership number, etc. I am talking about the numbers which are there because we know that we meet the people. So that number of people are there. So only I am talking about ICAI. There is UAE, AAA, there is PICPA, there is ACCA. Everybody is treated there because it is not only ICAI domain there. So you look at that competition also and then do it. Way of doing business and profession is completely different. There it is clear-cut communication which works for you. It is not like I will do this, this. No, either you do it or you don't do it. That is the way the business is generally done in that part of the world. So just look at those angles and then do that. As a last slide, I have one request here. Again, rather it's an announcement. Committee for members in practice, with a formal agreement with them, we offer the applications what you saw earlier, 5 applications free of cost for all members. So even if you have an idea to move to Gulf, to set up business or to employ, whatever it might be, you can actually try this in our applications completely free for 3 years for you as a member. So please, I would request you, please register it and make avail of use of it. We provide free training, we do a lot of things so that your accounting practice or your client's accounting or all the finance related things can be much smoother with Zoho. Complete cloud management, rather you are sitting in an office and doing it, you can do most of the things on your mobile. So that kind of environment we are offering. I would urge you, you can do that. With this, I will ask any questions, or if there are no questions in the interest of time, I'm available outside. You can meet me and then I will answer your questions. And this is last slide. Shukran, ahlan wa sahlan. That means thank you, and come and make Dubai as your home. Thank you.
Good afternoon. It's my privilege to say a vote of thanks for the session. Thank you so much, Gururajan sir, for your valuable insight for the topic of GCC tax landscape onto GCC, and wonderful opportunity for the members. Once again, on behalf of the Ahmedabad branch of WIRC of ICAI, I thankful to you for your sharing your valuable insight and the time for the session. Thank you. Yeah, we are starting. Hello. We are starting fourth session without any break.
We are having a quick 5 minutes of tea break. Ahuja sir is with here. With the paucity of time, we'll start the session at 4:30. So requesting members to quickly have their tea and get back in the hall by 4:30. Thank you.